The most important pattern within technical analysis is the five wave pattern. It underpins all of this. It's really what marks a trend. And to give you an idea of what I mean by that, if you're new to this, is if you follow me here, what you're looking at is a crypto, an altcoin that was in a devastating bear market. So whenever it bottomed right here in 2023, the sentiment was just abysmal. And so we got this uptrend off the low with very tepid volume, right? There wasn't a lot of conviction in there. And the assumption was, oh, it's just another bear market rally. And then all of a sudden we got a drop. The belief was, oh, we're going to make new lows, but volume was light on that drop as well. And then what happened? Price went vertical, and this is the key. This is what, when it comes to these five wave patterns, if you can identify the third wave, then you're in business. The third wave, when it comes to sentiment, is when everybody gets on the exact same side of the trade. Shorts realize they got it wrong and they cover at the same time breakout buyers buy, and those that were early adopters, they want to buy more. So everyone's buying at the exact same time, which causes price to go vertical. And it's usually met with the max volume within the trend and max momentum. The fourth wave is when gains are taken, and it's also where latecomers say, I want to get involved. I missed out, right? And so they start buying from those taking gains, and the fifth wave is a final move higher that happens on lower volume and lower momentum, less conviction because there's less involved. You can call it the suckers rally, because what happens after the fifth wave is over is you get a three-wave retrace of the same magnitude. So this pattern is very important for this presentation, and I just wanted to explain it. Now we are going to get into the interactive portion of this webinar. So if you take a look at, this is the S&P, this is the Bitcoin, a 3-day chart. It's the bull market that we're currently in. And take what I was telling you about three-wave patterns, the third wave being the most important. Try to identify the vertical portion of this pattern. And it's right here from late 2023 to really up until late 2024. This is when price went vertical. It was also met with maximum momentum, and it was met maximum volume right here and maximum momentum. So this was clearly wave 3 right here. Okay. We then have this congestion that ended in early April, and we're pushing higher to new highs on less volume and less momentum. And not only less momentum, but the RSI on the 3-day is below this 73 level, which is pretty key. Being on the other side of it, the north side of it is quite bullish, and tops tend to happen within this trend on the underside of it when it's used as resistance. So putting that into context, this is what I think is playing out. From the 2022 low, back and forth, vertical move higher. This is wave 4 that ended in April. And there's 3 ways that I see this fifth wave playing out. And I just want to be really clear that I think we're in the final fifth wave of the cyclical bull market within Bitcoin. You can call, this is basically the suckers rally. Now, this is a very large pattern that's playing out over many years. So it's a suckers rally worth playing, but it's worth knowing that this is wave 5. And let's assume wave 5 ends where I think it might somewhere in the 128 to 149, or not think it might, but I think we're definitely going to make one more swing higher to like 133. But let's assume that that's the top. We're looking at a move down to 58 to 35,000 over the coming months. So not something that we want to hang on to, especially considering we've been buying so strategically along the way. So there's 3 ways I see it playing out. One is that we have all waves in place for this top right here at 120, what was it, 125-ish around there. That's all the waves you need. But I think we're going to get one more push at least to 126, 128, 133, maybe 149, somewhere in this red zone. And then we're going to see a pullback. So the bearish scenario would see us make that move and then start breaking through these key supports, 104.5. Then 86,875 are going to be important. Below 86,875, and I think the top is in. And you can risk manage how you see fit with that. The other scenario is that we make a move higher, break 104,500, but hold 186,875. that would set us up for this final extended fifth wave to 200 to 224. Okay. And the most bullish scenario would be this kind of back and forth, back and forth. We hold 104, 500 and see a vertical breakout over 149. We would have to see volume expand and we'd have to get back over this 73 level on the RSI. No matter what scenario plays out, we see this final fifth wave is not a place to buy and hold. That's not what we're trying to do here. That time we believe is come and gone. It's a time to trade the remainder of this move, which some people don't like to hear. But we're not hodlers. We don't think that you don't have to hodl. I think that there's plenty of data to actually manage Bitcoin's risk.